And then there's also offices. Offices, there's a huge amount of demand. Sorry, no, sorry, not huge. Less demand, but oversupply. Excuse me, my voice. So why is it oversupply? A very, very actual fact. Who have been to KLCC? KLCC, that site, did you know Megan Avenue 1 and Megan Avenue 2, as per right now, because opposite my bank, is fully empty. 98% empty. And why? Everybody's working from home. All the people, lawyers, executives, banks, right now, all working from home. Nobody's working actually in office. Why? Because only 10% or 5% from the building can allow to work in office. That's the reason why a lot of banks, a lot of MNC companies delay the time of approval, and there's also the time of space. So this is the first sector. Second one, okay, loan approval rate for 3,000 and above are actually doing quite well. Those like first-time home buyers. So they account of 20% of their debts. As you can see, 56% actually live in urban areas. They're not directly in town areas, but in urban areas. So 50% actually taking up your fixed loan rates, like for example, those like 200,000, 300,000 property. They rather take like BLR, which most banks are actually doing BLR right now. Only AIA. So what they do right now is that they're looking at 29% unsecured loans, 21% is actually DSR, and also 23%, which is actually more than 30 years above. This is directly from Bank Negara. The data all directly from Bank Negara that's shown during MCO period, they are doing very, very well. So banks are looking at three particular things: collateral, which is the property, whether we can actually finance or not. If your collateral is facing a T-junction or facing a graveyard or facing at a particular unfavorable area or noise pollution, most of the time, banks were not able to finance or do not want to finance at all. Okay? Then we look at capacity. Banks look at three C's. Another one is capacity. Capacity, whether you can afford to pay to the bank or not. Now, a lot of agents refer to me saying that why a lot of foreign banks or local banks I give them asset, but they don't give me money. Then the first thing is I ask why. First thing is they tell me the client is actually a retiree. Now, retiree means what? No consistent income per month. No more income per month. Meaning that there won't be any income per month, but there's only asset only. Now, that's the reason why I told a lot of agents, make sure the investor or the people must have recurring income, at least 60% recurring income, 40% asset. That is the ratio. If 60% recurring income, maybe they have their own chicken rice business or their own logistic business or online business, or they work under someone as an employee. They have an income, okay, to actually pay off the debts. Then the bank will actually take the asset and loan you the loan because they know that you can afford to pay us back. Okay. The third thing will be character. Why character? Character is a person that whether he pays on time or not, or he missed payment, especially when we see credit card, we see personal loan, we see car loan. How good is his paymaster? Is he paying well, or is he paying over? So we will know what type of character of customer, because character of a customer will not run away. His personality, as per what we understand, is the type of person that we are favorable or non-favorable to the customer or not. So the home loan approval rate from last year, 2020, we stood at 72%, which is quite good, versus 2019 and before, which is 75%. So we still hover above 70%. So moving forward is that, you know that loans being rejected is because of a few things. So we would see that the first thing is borrowers already high in debt, all right? And the second thing is borrowers have less residual income after taking into loan income. Monthly expenditures are quite high. This is the reason why they reject. Third thing is borrowers have poor credit history, okay? And insufficient documents to support repayment obligation. These are the main reasons we found out many years. These are the four main reasons that a lot of banks reject their loan application. So another one, Current market for first-time home buyers versus the housing loan approvals by house pricing. Again, this is directly from Bank Negara. So if we see in the chart here, until 2020, we've been hovering above 50%. 2021 should be even hovering above 50% because first-time home buyers are very encouraged. That's the reason why government is pushing on HOC program. So HOC program has been extended until end of this year. It's already announced by the government. But if you can see below, the rate of approval for banks approving rate very high is those 300,000 below, 300,000 to 500,000 is very high approval. But surprisingly, 1 million above is only 8%. Why? Because those people who are 1 million above, banks are scared to take that particular risk. That's why you're very stringent on property for 1 million above. 500,000 to 1 million, still okay. So these are the type of data that we have from Bank Negara that they are very cautious in approving loans. Next one. The preferred lending for real estate for foreign banks, right, are measured by 3 particular areas. So the first area is actually local and foreign applicant must be earning and paying taxes here in Malaysia. So the local finance, so the people who are working here locally, which is the foreigners, are eligible up to 70% in average. All right. So another one, which is the T4 clients, which is the VIP clients, the premium clients, you can classify them, or the preferred clients, right? These are all the VIP clients or Citgo clients who are third house property buyer. A lot of foreign banks love this third house property buyer. That's the reason why we also give them 70% margin, the preferred rate, which is foreign banks. Now, homeowners looking to cash out, right, which is refinancing. They expand. The reason why they want to cash out because they want to expand business, especially online business, digital marketing. A lot of agents talk about digital marketing, how to do SEO, how to do SSM. So they also do in the terms of education. Now, education loan very hard to get, especially renovation. What they do is they cash out from their property, and from the 60% cash out, they either buy opportunity and time, which I'm going to explain later on. All right. So these are the 3 main areas that banks are focusing right now, especially foreign banks. Now, the next slide is quite interesting. The next slide is based on one of the feng shui master, Joey Yap. They say that the top 10 industry that doing very well for the next 20 years. So the first industry doing very well, next 20 years, because the last 20 years from 2019 before was actually what I heard from my good friend, okay, and from Datuk, and I also learned from other friends also as well. Is one element before was an earth element. Now it's a metal element for next 20 years. So delivery industry is actually one of the industries doing very well. You can say like lorry.com, you can say people who are actually doing logistics or shipping company. Second industry doing very well is online payment platform. So people who are doing Alipay, GrabPay, they're doing very well. That's why they're expanding. E-commerce is doing very well, especially those American company called shop.com, or even there's also one called doing those health supplement, or Lazada, this e-commerce. Education tech is up and coming. A lot of people, especially agents, are forming up education tech. Another one, education tech you can talk to is Profre Property, the one that is collaborating with you right now, or another one doing a multitask online training, okay, especially for MNC company. All right, this education tech is very good, especially people who are doing, for myself, doing MBA. We're also doing online for the next 2 years. So these are the things that are coming out right now. You don't need to be physically there in campus, but you can actually learn online. Now, pharmaceutical and telemedicine is actually quite good right now, because those people who are doing pharmacy business, what they do is they check people record status, how healthy they are. They don't need to see physically. They just ask 5 medical questions. They will know what type of medication they should give to you or over the phone. Now, 6 is electric cars. No, electric cars is up and coming. Electric cars are like those who are doing Tesla. Another one is that Huawei. Do you know Huawei just launched their own electric car? A lot of people buy Huawei smartphone, smartwatch, smart iPad, but they do not know they overtake iPhone business. They own their own electric car. Electric car meaning, right, they're hybrid car for electric, right? They connect to your phone, your watch, everything. So iPhone doesn't have that. So right now, the smartphone for Android phone, right now they're launching electric cars and they're coming inside Southeast Asia very soon. They already launched it in China, which you can actually go in YouTube and Google to find out more about Huawei electric cars. They are up and coming to overtake Tesla. All right. So the seventh one will be insurance. Insurance will do very well in terms of property, in terms of health, in terms of COVID-19 insurance. You can do claims. The eighth one is digital marketing, as I explained earlier. What's digital marketing about? Ninth one is gaming industry. How I know gaming industry doing very well is that you look at YouTube. There's a lot of advertisement called BK88, or there's a lot of other advertisement that do online gaming industry. So this gaming industry, with the more you play games, the more you actually earn in terms of dominant competition. South Korea is very famous for gaming industry. If you play those gaming industry in South Korea, the winning amount for a team is 20 million USD. If you win a certain game in South Korea, it's 20 million USD. That's why gaming industry is actually going very well. The 10th one, as I explained, is digital wellness and spiritual. Those people who are do online yoga, those people who are do like people who are actually like e-sport. Yes, exactly. So e-sport is another one that's actually doing very well. So these are industry are doing very well for the next 20 years, the top 10 industry. So let me move forward. Okay, so let me share with you what is the application process again for no matter foreign banks. When you refer to a loan specialist, you need to do a recap where you refer a loan. You must make sure that you perform a credit underwriting, loan approved, and a loan acceptance. Right now, for COVID-19 period, it would no longer take 2 weeks. It would usually take 3 weeks, especially SME loan for those commercial activity. So these are the income documents again as a refresher course. Left hand side is salary, right hand side is business owned people. So these are the foreign banks and local banks standard documents that's needed for all applicants. All right. Another one is property documentation. Okay, of course, when you refer towards the booking form and customer contact, we actually need a copy of title and SMP to make sure we know what type of property we financing and to make sure that this property is actually have a title. Now, those banks actually tell you, right, the property without title for more than 10 years, a lot of banks cannot finance. Okay, property without title within 10 years, a lot of banks can finance. So what banks can finance without title for more than 10 years? Only two particular banks, which is Public Bank and M Bank. But they only can do one time. If you do the second time, most likely they will not do it all. Because right now, the new law for moving forward is that now developers, once complete a property, they must hand in 5 things. One thing is the copy of title, the keys to the property, CCC, right now it's called certificate of fitness or even certificate of completion. The fourth thing is, of course, you must check whether there's actually any leakage or any damage to the property. And then the last thing is your architect approval for this particular design. All right. So everything has been done for landed properties, especially bungalows. All right. Housing loan, how to calculate? Very simple. Your outstanding loan amount times interest. You get divided by 365 days, you get the interest per day. So this is one of the example that actually shared with a lot of agents, refresher costs. So DSR approval is total commitment divided by your net income. Now, your total commitment can be your credit card, personal loan, housing loan, overdraft, PTPTN, etc., etc. But if an applicant got AKPK, a lot of agents ask me about AKPK. AKPK is the one that already reconstruct their loan with Bank Negara. A lot of times that conventional banks will not accept AKPK already. Now, how we accept is that conventional banks, if you have debt consolidation to, sorry, Jenny, yeah, I would go a bit slow. If you got debt consolidation to, for example, Standard Chartered and also Alliance Bank, if I'm not mistaken. So Standard Chartered and Alliance Bank, when you debt console, they will actually reduce your credit card, your housing loan, your personal loan, combine to one loan, give you OD facility, and then they will give you a rate of 2.8% in Standard Chartered and Alliance Bank, and not mistaken, above 3%. Now, other conventional banks, after when you debt console, after 5 years, you want to refinance out again to reduce it even further, can. But if AKPK purposes is actually monitored by Bank Negara, then cannot. Because once you want to reconstruct out towards a conventional bank, it's not easy, I would say. Not very easy. Unless you pay off from AKPK first, or else you got letter saying that this has been actually finalized by AKPK already, it's been dealt already, it's been settled already, then conventional bank can actually get a loan approval for that particular loan that you are actually intended to buy that particular property. Okay, this one I skip because it's not necessary. Okay. Okay, Citibank Premium. Citibank Premium, I would say, I would let you know is that most of the time is high net worth clients. So these high net worth clients that Citi Gold or Citi Premium or Citi Priority or even Premium Banking, Privileged Banking, they have this high net worth program where you have a fixed amount deposit with them. You earn that so-called exclusive deposit for FD purposes. But for CIMB and for HSBC, what they do is as long as you are a high net worth program with them, they can pre-approve a client with special promotion. For example, for CIMB, you got 1 million saving with another bank, not intentionally with CIMB. What they do is they cap you at 30%, you got 300,000, then divide by 12 months, you get 25,000 per month. So this 25,000 per month is so-called your income per month without even banking with them. Make sure you show them a bank statement. But for HSBC is different. HSBC is more to 499%, 499% in terms of DSR. How do you get your 499% is you must have 5 things with them. First thing is you must have more than 6 months, okay, in HSBC premium account, if I'm not mistaken. You must have 200,000 FD deposit with them. Third thing is you must have investment with them, okay, either credit card or actually unit trust investment with them. And then the fourth thing is that you must have a total amount of savings, like for example, not only in FD, but also in terms of money market. Then you can go up to 499%. Okay. I will answer your question later. Let me go through the slide first. Okay. All right. So after that, already you can do like conventional 25K transaction per daily, wherever not, no matter with other banks also as well. All right. So for foreign loan inquiry is that loan inquiry for foreigners must be in Malaysia. Secrets must be here. 6 months bank statement must show crediting. This one can go up to 75% or 80% depending on which particular foreign bank you go to. All right. Citibank will go up to 75% and 70%. Like I mentioned to all agents, I will share with you whatever knowledge I have in terms of foreign banks. All right. Okay. Loan indicative approval. A lot of banks will have this. What we need is the local domestic party, which is the local Malaysian. We need their IC, get their consent. They must sign a consent form. We put inside secret checking. Once we pull out, we will know how much loans they qualify for. What is the DSI have? What's the DBR have? Debt burden ratio, personal burden ratio, and what is his debts? Okay, how many housing loan or commercial loan or factory loan under him? Then we will know whether the customer eligible to place a deposit or not, whether he's actually eligible or not. So that agent will closely seal the deal and less time taken. Why? Because when he paid deposit first, without even checking all this, right, most of the banks will get the same secrets and CTOS right directly from Bank Negara or third-party checking. So if you don't check first, okay, and you pay the deposit right, don't forget, they will actually put a clause subject to a home loan approval. If there's 2 approval fees been rejected, they need to get a so-called refund. Do not ask them to get a refund. Always ask them to go checking first. Because once they check and the bank say they are approvable, or loan approvable, most likely they will not get a refund. So it's easier that way for an agent to check upfront, less than 1 hour. For banks to check this, it's just less than 1 hour. But do ensure it's Monday to Friday working hours. Okay, yeah. For foreign banks, for Citibank, we don't finance for under construction, industrial and land, but we need to finance for completed residential properties. For other foreign banks, they finance everything else, and also local banks. Okay, this is one of the example of cashback plus. So right now is that a lot of banks are focusing on 2 things: zero cost, non-zero cost, and our third one is cashback. What's the difference is that zero cost is that they finance everything inside without making much more payment upfront. which is your loan legal fee, your loan stamp duty, and your valuation fees is finance inside. Non-zero cost, that means the customer pay upfront, everything upfront. They do not care, they will just want the lowest rate in town. Cashback is different. Cashback is that customer pay upfront first, your loan legal fee, your loan stamp duty, and your valuation fee. When customer pay upfront first, the bank will reimburse back, which is called rebate back. That's why it's called cashback. Rebate back inside their housing loan account, so can withdraw anything. So basically, customer pays zero lah. So once that is done already, then the customer can enjoy the lowest rate in town. So those people who are taking zero cost, they always get the highest rate and highest installment. Okay, so refinancing benefits, like I mentioned to you, is most of the foreign banks will look at this type of category. They're looking at a category that people who want to expand their business, people who want to send their kids online education in Australia or Singapore. But what they do is they train them online, or people who help them renovate their house. So we are mostly targeting those rental agents who are renting the property. They can use this type of engagement plan to ask them to whether you want to buy time, money, or whether we want to reduce their debt, or whether you want to expect, or whether you want to buy opportunity for next purchase. So this is the one that actually a lot of rental agents are actually asking homeowners to become a buyer later on. All right. So, okay, this one later. Let me share with you the third slide. Okay, give me a minute. Let me drink water. All right, so Citibank mortgage. Okay, refinance your mortgage for Citibank is based on 5 things. So the first thing is that must consolidate all loans into one. Of course, better enjoy rates, lower your installment, better cash flow against your business, education expenses, your property, and reconstruct your DSR. Okay, when I was talking to a few of my agents, right, and then they recognize that a lot of people are unaware of 2 things. First thing is, do you agree with me when you go to any insurance company, when you say buy insurance, sell insurance, right? Most likely, right, a lot of people are very concerned how to get it and how to concern, for example, how to reduce your debts for property line also as well. So the first thing for a home investor or even a first-time buyer, 2 things they have in mind: time and opportunity. Time means what? To reduce your debts. The most important thing. Because the more I pay my monthly installment per month, I do not know how long I'm going to pay off. So that's time. Second thing, opportunity, is to buy asset. The more asset I buy, the more wealth I get. So how to get these 2 together? So what you need to intend to do is, first thing first, you need to know what they're looking for. If they're looking to reduce time to pay off their debts, there is a way. If they're looking to reduce, you're looking to buy opportunity, to buy more asset, to get more wealth, there's also another way. Or to get both together is even better. So how to do it? First thing is we need to look at what type of location we are financing. Malaysian, those people who are not having a lock-in period for more than 3 years penalty or 5 years penalty. Because a lot of loans right now for mortgage comes with 3 years at 3%, 5 years at 5%, depending which bank you are taking. So most likely, we are checking at housing loan, loan eligibility. What is the loan valuation after 7 years? Okay, then we will look at into this particular consolidation calculation. So this is actually what he wants to intend to do. He wants to intend to buy opportunity and also want to reduce the debt. So this is a live calculation. So this oil and gas company from Schlumberger, so he's 35 years old. His earning is commission up to salary bonus 16,000, but his net income is actually 12,000, minus off his commitment, his petrol, his grocery spending, etc., etc. 30 years tenor. If you see the green box area, this is what he have right now. His credit card, right, is outstanding. It's 113,000, It's a lot. Monthly installment is already 5,006. His personal loan is 100,000. But his outstanding amount he took out is 50,000. So his monthly installment is 2,000 something. His car loan is 125,000. His outstanding is 99,000. It's a BMW second-hand 3 Series. So his monthly installment is 1,009. His housing loan is 581,000. Outstanding is 555. Because you know why? 3 years at 3% is over already. 3 years at 3% his monthly installment. So it's actually paying 3,300. So it's already, this is his 4th year. So basically he can refi out. He can refi out already. So what he do is he can do two things. In the pink is a solution where he can refinance or you can debt console out his credit card and personal loan into his new housing loan. Combined housing loan rate. Why? The credit card is 18% interest. The personal loan is 6% interest. Can I charge them with this interest? No way, right? So you need to attach with one housing loan to reduce up to 2 point something percent or even 3% plus, because that is a very low rate and they play with tenor also up to 30 years or 35 years. So when they do that, the credit card personal loan is pay off with other banks already, so no more outstanding already, because you can apply credit card personal loan later on in the future. Now, your new installment for credit card personal loan is 800 per month already. So you see, the savings that you have, the commitment that you have to pay per month is 12,000 versus 5,008 per month. His total money commitments reduced to 7,000 already. Now, question to you, per month, can he buy another Monkera property or not? Easily, yes. Easily, yes. Why? Because this customer already reduced his time to pay off the debts. After 3 years, he already 3%, he already can refinance out already to debt console. Or after the particular interest already, he can also cash out, okay, 50% to reduce 50% of his debts and remain 10%, give it up to maybe, for example, your agency, which is, I give one example, Property Management, or any other agencies that hold this particular 10% to buy another new opportunity, which is asset. What by asset? Did you know a lot of developers are selling 300,000 below right now? They're moving forward. So when you buy the 300,000, right, the next 5 years, you will multiply itself 200% easily. Rather than you buy 1 million or 2 million, how long does it take to introduce to 200%? Hardly. But you buy 200,000, 300,000 property for a landed strata, not high rise, landed strata, can flip easily 2 or 3 times. So this is the thing I want to tell you is that this is an opportunity for people to refinance cash out. A lot of agents right now refinance cash out to buy 2 things. Auction property, no longer fire sale. Why? Because auction property is 40% to 60% down. But the second thing you want to buy is HOC program, or you want to buy a new launch program is 200,000, 300,000, so they can flip the acquisition a lot. So these are the types of property that a lot of homeowners intend to get is 2 things: reduce debt and buy opportunity, which you can see a good example here. So I finished my presentation here, a good presentation. Now I'm doing my, I pass the baton to my buddies here to do some Q&A.
All right, thank you very much, Eric, for your presentation. I think as a agent, we have an insight on the view of what a foreign banker view on this current market, and also the key takeaway is time and opportunity lah. So it's a good things to tell our buyer as well, especially at current time. Okay, so there are some questions for you, Eric.
Yes.
From Jenny actually. T40 for third property, if buy from developer, HOC package can get 90% or not?
Okay, third property buyer confirm cannot lah. Confirm cannot. Unless you are telling me that you're doing this particular program. Okay, this one, I have to bring in Andrew inside. Andrew, are you here or not? Andrew? I know Andrew can do this. Okay. What they can do is that if third home property buyer want to get HOC package, can. But there's a way. There's actually 2 ways. In actual fact, I'm not supposed to stay here. But since my buddy is here, I cannot hide already. All right. Did you know a lot of times when people get 90%, they can? How? In actual fact, right, your third home property buying in 90%, there's 2 ways to get. One way is that if you got 2 properties, you need to keep one inside secrets to know that you're a good paymaster. You refinance the other one out, but don't refinance to a conventional bank. Refinance to a non-banking license. For example, Did you know AIA can do mortgage in terms of BLR? But AIA can do one thing is that they did not reflect on their secrets and CTOS. They will not reflect. They have their own reflection on their own secret CTOS, AIA secret CTOS, but not the conventional way. That's why when the bank, like for example, Citbank, HSBC, or any other bank, when they pull the secrets once they refinance out, already pull again, right? It's only one secret only. So your third property is actually forever 90%. But the most expensive thing is, of course, you need to pay again. Your loan legal fee, your loan stamp duty, the same thing as usual. That's the first way. Second way is that your HOC program, how you can get is your sons and daughters if you got family members. So what you need to do is send your sons and daughters to maximize their opportunity or maximize their first two properties with HOC program of 90%. Okay. So what a lot of times with my Citigo client is they send their sons and daughters or the cousins, right, put under their name and they act like a guarantor to actually pay, help them pay their so-called their salary per month, so that the banks actually will actually take into consideration saying that, oh, they're actually earning this type of income or additional director fee or additional bonuses per month or actually quarterly bonuses or even monthly bonuses. This is one way, another way to actually work it out. Okay, conventional banks accept that if you tag it under your, because your future sons and daughters or your future nephew or nieces, right? Two things you can stand is their tenor per month, because their age is younger. And then second thing is your installment is lower. All right. So hope that answer your question, Jenny.
Okay, thanks, Eric. I think on top of that, maybe I share some of my input as well.
Yes.
Jenny, because he mentioned about third property. So third property, it also depends on whether the two properties before that, whether it still got loan or not. So when bank disperse the money, it has to make sure that if to third property have 90%, then make sure it likely is that first or second is already finished pay off lah, then third property can get 90% lah. This is one possibility as well. And another possibility probably is last year, I think last year or earlier last year, was mentioned that there's property that's more than 600,000, the third property can finance more than 70%. So this is yet to be verified, but probably is because of that also, Jenny. So yeah, thanks for the questions. And we have another questions from Ibrahim Mohammed. The question is, which are the banks that do loan consolidation?
Okay, there's a good question. There's actually two banks can do loan consolidation right now. To be honest, there's only two only. One's a Pioneer Bank, which I think they're going to stop very soon because a lot of the DSR have been fluctuating, which is called Alliance Bank. So Alliance Bank got close to good 3 years, but their NPL, which is non-performing loan, is increasing. So this is what I heard. Standard Chartered just did it, I think, close to 2 years already. It was 1.5, now close to 2 years already. They're doing quite well. So they're doing a lot of this debt consolidation where they combine your credit card and personal loan, must combine your credit card personal loan into one housing loan. You cannot combine all housing loan together. You must combine with your credit card, your personal loan into one housing loan. It's a must, because your other things once combined already, your interest will reduce further, it will lower. This is the first thing to save a dead cockroach to come alive one. You know, there's one Chinese saying, I don't know how to pronounce that. Derek, you can correct me. Ham yu, something fang, ham yu, the salty fish can come. Yeah, ham yu fang san, something like that. Ham yu fang san. Okay, sorry, my Chinese is very bad. Ham yu fang san. That means a salty fish can come back alive. The first wave is Standard Chartered and Alliance Bank can save your life. The second wave, die must go AKPK already. No other choice already. All right, this is one of the way that you can do.
Okay,
right?
thanks, Eric. Yeah, one more question from Cynthia. All right, her question is. Yep. Eric, are you still there? Hello. Okay, Eric, there's a question from Cynthia. The question is, turn bad debts into good debts to enjoy good rates. For example, decrease high-rated personal loan to a low-rated property loan. Can you elaborate again on this point? Hi, Eric, are you there? I think Eric is disconnected, likely. Eric? Hi, Eric, are you there? Cannot hear you. Oh, I think he disconnected, if not wrong. His line is dropped. No problem. Cynthia, maybe I can answer your question. I try to answer based on my understanding. Okay, so what does it mean turn bad debts into good debts to enjoy good rates? So what is advised is this is where the refinance comes in, whereby some owners, right, they can refinance their property. Maybe they still got a very low repayment outstanding with the bank. So now the property value is already increased to a certain value. So there's a gap there. So normally what owners can do is to refinance to the current market value. All right. Eric, you're there. Okay. Hold on. Wait. I cannot make you co-host lah. Okay. Let me further explain. So just now was
Hello?
talking like, yeah.
Hello, can you hear me?
Yeah.
Yeah, sorry. Just now someone mute me. I tried to click the button. Okay. Sorry,
Okay.
you back to the question.
Okay, maybe I let you do the explanation lah. Okay.
Okay.
So Cynthia was asking, turn bad debts into good debts to enjoy good rates. So for example, decrease high-rated personal loan to a low-rated property loan. So you have mentioned that. So can you elaborate more on that?
Okay, Cynthia, you're actually 50% there and 50% not there. The answer is 50% correct. So actually the main purpose for them to refi cash out is what's their intention. So both their intention is to actually reduce debts, which is time. If you agree with me that when you apply a loan, you need to take 35 years or 30 years to pay off the loan, especially housing loan. SME loan is even more further if you want to renew. OD facility, you already know how much. Credit card, your debt for life one, for sure one, because especially Chinese or Indians or even Malaysia, their hands are very itchy one. To be honest, my hands also very itchy one. Every month, my credit card is always on that one. It's life for that one. So how to reduce all these debts this time? How to actually buy opportunity is actually at your money, wealth asset. Now, in order to do so, because it's having a good bad rate towards a good rate. For example, if your 2021 or 2005, the rate that set was BLR plus interest rate, correct or not? So at that time, it will be around 7 point something. If you refinance right now, since 2021, two things will happen. Your valuation would increase, will spike up. Easily will spike up if it's 7 years old or 5 years old. But if I use 2001 or 2005, 2005, the valuation is huge. It's already more than 350%. So it's depending where the transaction is. Easiest way to know, Cynthia, there's a website called Bricks. Have you heard about Bricks or not? BRICKZ. So this website Bricks, when you go into, they will state with you where's the highest transaction. All right, where's the highest transaction in terms of property, especially residential or commercial. Once the highest transaction is there, you will know, oh, Monkiara transacted the highest. And then I expect to get the type of value in terms of refinancing. Yes. But you have to take a factor that COVID-19 is happening right now. So a lot of valuers are skeptical. That's the reason why a lot of banks cannot get the valuation. So what you need to do is buffer 15% lower or 10% lower from the actual transaction. That's how you calculate. That's how banks will actually gauge into the fact. Then you know how much you can actually cash out from there. Usually cash out will be 80% or 60%. Why I roughly say 60% is I want to show homeowners, if I can reduce 50% of your debts, I reverse 10% of opportunity. For example, I'll give it to Derek. Derek will introduce me opportunity inquiring 300,000, 200,000 property. But I really refi cash out already. I still can afford to pay to this existing bank, which is Citbank. And I'm buying a new opportunity because it's still under construction 3 years. Developer is still giving me rebates during the 3 years. I still can pay off the 3 years. Once completed, can I flip? Yes, you can flip. Because it's just worth 300,000 below. And that type of property is in KL area or in Selangor, your prime area nearby LRT station and MRT. So these are the factors you need to look and play. And the second thing is you need to have an intention of, for example, if they want a bigger cash out, 80%. So you can say the same thing, I reduce 50%, but I got 30% additional income. What are they going to do with this 30% additional income? It's the same thing, same factor. It's just that one problem. What type of property you actually refinance? You get what I mean, Cynthia? Sometimes, right, they do not want to refinance bungalow or condos. They want to refinance factory. Now, factory is 20 million minimum. Sometimes 5 million, 7 million is quite big. Sometimes a very big factory is 30 million. You can refinance a factory. But again, what's the intention, the purpose? Maybe renovation. You might say that to the bank. So if you're doing renovation or even shop lot, like what Jenny said, or even those like retail lots or shopping mall. Shopping mall can refinance one. I finally found out. Indoor shopping mall can refinance one, provided you got a title. Because some shopping mall don't have title one, It's strata lot, All right, you have to classify it. So you have to know what can do, what cannot do, what is the type of property they can refinance, what's the type of property cannot refinance. Offices can refinance. But a certain type of offices, for example, is a virtual office, cannot refinance. Virtual office, some people say, hey, can my virtual office refinance or not? Because I just lease out to this company A, company B, company C. Cannot. If it's standard office owned by you, then can. All right. So this is the intention, Cynthia. So you clarify with your homeowners, get homeowners, what's their intention? They want to get out at maximum cash, or they want to reduce the debt, or they want to renovate. What's the intention? Let them know the intention. And second problem, what type of property they want to refinance? Because do you know, if this property having a lock-in period of 5 years at 5%, most likely they cannot refinance already because they have to pay penalty with the existing bank. You understand where I come from, Cynthia? So you have to ask these questions. If these questions really validate, then the next step for a bank to do is check the property valuation. Because I need to pay off your outstanding loan with the other bank. If the property that you're getting since, for example, 7 years ago is 700,000, now your property for landed property is worth 2 million. So your outstanding loan right now, you pay 100,000 right now for the first few years. Now it's already 600,000 outstanding. So you need to pay off a 600,000 loan from the 2 million valuation. You still can get 1.4 million cash out. You know how much money they can deal damage. They can reduce all the debts and still got 300,000, 400,000 down payment. You get what I mean? So this is the way to play the game, but depending what type of property they want to refinance. A lot of times, customers do not know which property is the best property to refinance. Best to check with you as an agent, check the property valuation for refinance. Then you can gauge how much, you can cash out this amount. I just need you to reserve for me 10%. Why? I give you opportunity. And what's the opportunity? You explain. Then I help you to reduce your time. What's the time? Your debts. That's it. Our team. All right. So back to Derek. Any questions?
Okay, Eric, there's also questions from John. John Lai, he was saying that just now you mentioned that you can refinance using AIA so that it will not appear in secrets. Can you elaborate?
Okay, actually, I was supposed to bring Andrew here. Andrew is from AIA. Okay, Andrew, you should buy me lunch. I'm sharing your AIA platform.
Andrew is here.
Andrew is here, but is he replying or not?
He's not here, right? I don't know.
Okay, and Andrew is actually from AIA. He's a good friend of mine. Okay, he's a company from SES. So what they do is that they refi. They work directly with AIA Mortgage. They would take into consideration of what type of property they have. So a lot of agents will come up to me, and then I tell them, right, go to AIA site. I'll pass you a contact named Andrew. Go ahead and check, or his wife named Jasmine. So what they do is they will filter those property that is actually good for refi to AIA, so that your secrets from 2 become number 1. And how they do it is that, number 1, AIA do not report to Bank Negara. You have to understand this. Secret Citos, Ramsey, all report to Bank Negara. AIA don't report to Bank Negara. AIA report to Liam Institution. It's a Liam Institution. They report to a committee full of insurance agent. They are the only agency for insurance doing mortgage loan. But the only difference with AIA is that, yes, Mohammed, I will share with you the contact. Don't worry. Do not worry. The thing is, they themselves will, what to do is that they will help you reduce your secrets without letting the banks know. This is an insider news. So once they do that, is that they won't do one shot, all the property refinance, because the conventional bank, the existing bank, will start asking questions. Hey, why you start to pack out so many properties out? You do it one by one without letting them know, and do it in quarterly basis. Okay, good question, John. Is there any risk by doing this? Actually, there's no risk, because you know why not? The only risk the only risk the customer need to have is paying up front your cost of entry, your loan legal fee for a customer, the loan stamp duty you have to pay by yourself, This one you have to pay by yourself. Okay, this one, AIA, whether they are packaged to absorb this or not, I will not know. You have to ask back to AIA. But that's the only risk I see. The only risk I see. Without if you don't mind using the fixed rate, for example, 4.99% or 5.99%, because you already know during a time, once you refi out, the only thing they have is the rate is a little bit upper. But during the time, if they can do this, customer do not mind, because customer want to invest. That's why they call investors. All right. Hope to answer the question.
Okay, thanks, Eric. One more question from Jenny.
Derek is a lot of questions. We should set up the second session already.
Yeah. One last questions we are taking here. Okay. Mr. Fu, any banks offering free moving costs for refinance shops now? Free moving costs for refinance shops.
Okay, Jenny, for free moving costs in refinance shops, you can call me directly. I know one particular banker directly from HQ in Maybank. Okay, he only give it to his VIP clients. If your client is not a Maybank customer, I need to ask him a favor so that he can actually set your client as one of the quota inside, because he got one long listing. Once he put inside the listing already, then you can do a lot of things with them already. You let me know. If the client is actually, you just ask the client. If the client is a Maybank customer, then by all means, he can go by himself to check with Maybank. But if the client is not a Maybank customer, you let me know. I'll ask the manager to slot in one more quota for you, because he owe me a favor. All right. So thank you so much.
Okay, all right. Thank you so much. Thanks to Eric for his sharing, and thank you everyone who attend this training session today. So before that, kindly leave your feedback, scan this QR code, and also in the chat box, there's a link to get your feedback as well. Thanks again. Please give Eric a round of applause. Okay, thank you, Eric. Thank you, everyone. So we shall see you tomorrow. Tomorrow we have another training session. We are going to share about leadership. That will be very interesting from my partner. Okay, see you guys tomorrow at 3. Bye. Take care. Eric, you can share your contact in the chat box. Some of them are asking. Yeah. Thank you, everyone. Take care. See you tomorrow.